market, Amit, they seem to have found some clarity with bulls charging onwards and upwards. And the global cues are also looking quite supportive, isn't it?
Yes. S&P 500 closed at a fresh high ahead of the Fed meeting. The S&P 500 closed at 0.76%, was 0.76% up. All three major US stock indexes advanced on Monday. The Dow Jones closed in the positive at 0.59%, and the Nasdaq closed in the positive by as much as 1.12%. Going to the European markets, those were also in the positive, and they closed in the positive at 0.21%. Coming to the Asian markets, that's where we see a decline for a third straight day, underscoring the need for policymakers to take more steps to revive investor confidence. Hang Seng today is down 1.95% as we speak, and Nikkei, although, is up marginally at 0.24%.
All right, and oil prices, that which they were a concern yesterday, they have eased by about $2 since yesterday, and this is on the back of China's ailing property sector, which has sparked demand worries, causing traders to reassess the supply risk premium from escalating tensions in the Middle East. Brent crude, as we speak, is hovering around the $82 a barrel mark. Yesterday, it had moved past $84. Now, the dollar index is, trading in a close range against its major peers as traders await the Federal Reserve's monetary policy decision, which comes out on Wednesday, for clues on when the US central bank might cut rates. The 10-year yields, however, they have slipped and they ended somewhere around the 4.08% mark on Monday. And since last week they have corrected by about 10 BPS now, but still holding above that 4% mark. Back home, another strong start for the Indian markets. We have in fact opened with above the 21,750 mark on Nifty, but markets have paired some of those early morning gains, and it's currently flat. Nifty, as we speak, is trading with a flattish bias, just trading under the 21,750 mark. Sensex is also trading on a flattish note. The mid cap and the small cap indices, they are trading in the green. The mid cap index is up about 0.2%, and the small cap index, that is trading up about 0.5% or so, and in fact it has scaled a new record high this morning. We are above the 15,700 mark on the small cap index. The previous lifetime high was somewhere around the 15,680 mark. So that's good news for the market. And there were some concerns about this volatility that we are seeing and the correction that we are seeing to take impact on the broader markets, because as we know, it's a broader market that sees a correction first once the market actually starts falling. But to understand what's going on with our markets and the global markets as well, let's also bring on board Mr. Amar Deo Singh, Senior Vice President of Research at Angel One. Thank you for joining us here on First Take, Amar. What's your overall assessment of the market? The short term, is the view bullish once again in the short term, or is it still a sell on rise sort of a market?
Yeah, I would say that if you look at the markets, Indian markets are clearly indicating that there's a lot of support for the markets at lower levels. That is something which is coming out very clear, despite the fact that we saw a significant correction, almost 15-16% in the most heavyweight of all counters, that is HDFC Bank, and which has close to 13.5% weightage. So despite that, the markets have bounced back, and yesterday it was Reliance up by almost 7%. So that tells me that overall markets are being supported, and also global cues have also been positive. You talked about crude oil prices moving up slightly. So that's within, I would say, comfortable zone, anywhere between 75 and 90. That's a zone which the markets are also comfortable with. So I don't see much on that side. But yes, what we are seeing is that a lot of heavyweights are getting into action. We are seeing earlier it was HDFC Bank. Now we are seeing Reliance. And also markets are awaiting the budget. How much actually the budget delivers is something we'll have to watch out for, because it being an interim budget, but still expectations and hopes are always there from the budget. And if you look at the broader market, which you talked about, yeah, across the board, be it the small caps, the mid caps, the large caps, we've seen some sort of resilience there, as well as pockets of very upside, positive upside move. And also there, what we are seeing is that PSU, public sector undertakings have been performing exceedingly well, be it public sector banks, be it the railways, be it the defense. So they have also been contributing significantly.
All right, and India VIX, now that has, the index has climbed above 16 levels today, and we are at a, at a 1 year high as far as the volatility index is concerned. Is that a concern for the markets?
So if I look at India VIX, so India VIX, see, I wouldn't say because ahead of budget, we definitely see a rise in VIX, because markets during this period, pre-budget and slightly post-budget, we see a lot of volatility. So I think this is along expected lines. Had the budget not been there and we would have seen a spike in India VIX, then it could have led us to believe that maybe there could be further correction or uncertainty in the markets or something of that sort. But this is along expected lines. The key question is that how long does, because if we go back and see, so just to give you a perspective, so if I look at India VIX in the month of March made a high of 17.36. If I go back slightly, in February, it had made a high of 19.39. Currently, it's around 16.5. So somewhere around 17. And we'll see higher VIX also. There's no doubt about it. We'll see the spike there as well. So this is expected. I don't read much into it, because markets are anticipating that there'd be increased volatility. That's the reason we are seeing a rise in VIX. Otherwise, there's not much to worry as of now.
All right, and it makes sense that the volatility is elevated considering such a data heavy week we have in front of us. Of course, there is the interim budget, but we also have US Fed's policy decision that comes out tomorrow on Wednesday. And of course, we are in the midst of the earnings season, and today we have a big one in L&T. I'll come to you in just a bit, Amar, but Amit over here has the street's word on what to expect from L&T. Amit.
Okay, thank you, Suresh. The street expects a sizable rise in profits when it comes to L&T, almost as much as over 33%, as much as 33.7% rise in net profit. Revenue is expected to jump 20%. EBITDA is likely to be subdued and actually would go down around 11.3%. EBITDA margins also will be going down around 330 business points. Now, the rise is basically on the back of strong order inflows and project executions. When we look at the stock, Amar, the stock has given a rise of almost 75% over the last 1 year. It is close to its all-time high of 3733 at 3,700. How do you advise investors to approach L&T right now?
So if you look at L&T, definitely the stock, see it on the long-term charts or even on the short-term charts, intermediate-term trend, I would say the trend is very strong. So effectively, it means is that there's no sign of trend change either on the long-term or the intermediate-term trend, and the momentum is there. However, what we are seeing on the daily charts, that is the short-term charts, we are seeing some sort of consolidation. It's like more or less the momentum has been declining. And also some of the technical indicators are clearly pointing towards extremely overheated territory in L&T. So effectively, it means is that upside now could be capped for some time. So it definitely makes sense for those who are long and holding positions. They can look at booking profits. If they don't want to book profits, they want to trail their profits, then the stop loss needs to be below the 3,300 mark, because it's almost 400 points from the current levels. But that's the next, I would say, swing bottom. So short-term swing bottom. So if a stop has to be placed, it has to be placed below 3,300 levels. Otherwise, this could be a level to at least book part profit in L&T. The long-term trend, there's no change in trend, or there's no change in the intermediate-term trend as well. And that continues to be extremely strong. So effectively, it also means one more thing is that any significant correction in the stock should be used as a buying opportunity.
All right, and before we let you go, Amar, considering the current market volatility and the temptation to enter this, before the budget, what are the key do's and don'ts that a trader should keep in mind on the budget day?
Yeah, I would say one thing you definitely need to keep a watch out on the budget day, that you can be right and you can still lose money on the budget day, because the market is going to be extremely volatile and the stops getting triggered would be quite high, because the possibility of the stops getting triggered, because markets will move both ways. So best is that you wait out for the budget, then you'll get some very good moves. Rather, if you are preempting and taking a position and the market moves both ways, the chances or probability of stops getting triggered would be higher, as compared to once the budget is over, the market to a certain extent has digested, maybe 10, 15, 20 minutes post that, you might get some very good trades in the index or maybe in specific stocks. So that would be a more appropriate way of looking at it, unless you have some option strategies which you plan to implement during the budget day.
All right, that's a view coming in from Mr. Amar Deo Singh. Sir, always great insights from you. Thank you for joining us here on News 9.
Thank you.
But with that, let's take a short commercial break and we'll be right back with Mr. Kush Bora of kushbora.com on the other side.
Currently, the industry is facing a lot of challenges as far as demand is concerned. Basically, the US markets has slowed down because of high inflation.
So obviously, diamonds being a dream product, something which doesn't have a utility value or is seen as a luxury. So that obviously goes off your shopping list. That's the first item that will go off your shopping list, especially in recessionary trends.
That lab-grown diamonds are not mined and they do away with the entire mining. So they save up on all the environmental damage that is associated with mining and of course, the mining cost, which is why they're even more affordable.
People that is impacted by all these recessions are the artisans, are the people who work in this industry, right? But I think lab-grown diamond has allowed them to actually use their skills in the same product.
This and more streaming on world's first news OTT, News 9 Plus. Download now.
Bangalore traffic is an example of something that has gone wrong with our system.
We have more than 50 flyovers in Bangalore city. If flyover is a solution to traffic problem, Bangalore should not have traffic problem.
According to TomTom Traffic Index 2022, Bangalore is ranked as the second worst city in the world when it comes to traffic.
The speed limit at the ORR is 80 kilometers per hour, but our vehicle has only moved 10 kilometers per hour.
What Bangalore needs is a surgery, but what we have been offered repeatedly are band-aids.
Only on the world's first news OTT. News 9 Plus, ahead of the curve.
Why is the state not looking at putting an embargo on that?
As a Telangana person, I will not accept.
How do ordinary folks deal with this?
जानना है तो देखिए, समझना है तो सुनिए, सीखना है तो पूछिए और कमाना है तो खरीदिए। जानकारी, सलाह और निवेश सब एक ही सुपर ऐप पर। पैसे का सवाल है तो जवाब है मनी 9। आजादी पैसे की, अभी डाउनलोड करें।
Welcome back. You're watching First Stick here on News 9, and the markets have paired some of the early morning gains, and currently we are trading on a flattish note. Nifty as we speak